Good morning, everyone. We are the Group 6. Today, our group will be presenting the analysis on the financial reports of Coverdell Group Corporation Limited. These are our group members. And these are the contents. I will first briefly introduce the company and the market it operates in, before analyzing its recent financial results and the key drivers behind the changes. After that, I will hand over to Manden Ho Wei, who will provide deeper insights into the company's accounting policies. Commodore Corporation Limited is one of the world's leading multimodal land transport operators. It offers a wide scale of mobility solutions, such as public bus and rail, taxi and personal hire, etc., in Asia Pacific, UK, and Europe. It has over 54,000 vehicles in operation and a large rail network that operates more than millions of commuters every day. The major part of its operations is it manages public transport markets and closely with governments and transport authorities. The company has shown stable recovery and growth in the last two financial years. In the 2023 period, Commodore reported an annual revenue of 3.88 billion, while increased tremendously in 2024 to 4.5 billion, which is high annual growth of 15.4%. It's a broad-based growth that has been backed by an increase in passenger numbers in the public transport, the taxi and personal hire business positively, and the addition of acquisition businesses. There was also an increase in profitability. The shareholder profit rose by 16.6%, $180.5 million to $210.5 million. Operating profit also increased by 2023 to 2024 by $272.1 million to $322.9 million, and earnings per share increased to 9.72 cents, improved to 8.33 cents. There was a number of key drivers that led to the financial growth. The bus contract renewals in the UK at a high margin. Additionally, strategic acquisitions were important. The purchase of A2B Australia enhanced the taxi network of the company in Australia, and the purchase of Addition Lee broadened its prominent point-to-point presence in the UK. These were considered as earnings accretive acquisitions.
I will cover PPE under AASB 116. In the note, the group present PPE as vehicle, premise, and equipment, so it's clearly fleet and infrastructure heavy. The main class include buses, taxi, and other vehicles. Leasehold land as buildings, freehold buildings, computer and automatic equipment, workshop, machine and tools, furniture and fitting, and the capital project in progress, or we can call CIP. The group applied the cost model. PPE is carried at the cost least, accumulated depreciation and impairment. CIP is held at cost during construction, and the depreciation starts when assessments are ready for use. Use the structure line method. On subsequent measurement, the key point is depreciation. The group used straight line depreciation and review useful life and residual value annually, with change applied prospectively. Useful life example are bus 20 to 22 years, freehold buildings 50 years, and computers 3 to 5 years. The main judgment sign is the tax and vehicle class. In 2024, it's 5 to 15 years, and 2023, 5 to 10 years. It can change the depreciation expense and affect year-to-year comparability. This slide is 2-year movement. Net carrying amount increased from 1,787.5 million at 2023 year to 1,862.4 million at 2024 year, a net increase of 74.9 million. The increase is mainly because addition very high, 3,067.5 million in 2023 year rose to 445.1 million in 2024 year. But the uplift is modest because it was offset by depreciation of 350.0 million and the disposal of 3 million and 20.0 million, consistent with flat renewal. On impairment, the auditor flags PPE impairment as a key audit matter, but management disclosed no impairment credit, with tax recover amounts based on value in use.
Now I talk about how ComfortDelGro accounts for its intangible assets. According to ASB 138, an intangible asset is something that has no physical form but can bring future economy benefits to the company. From the 2023 and 2024 annual reports, ComfortDelGro recognized several types of intangible assets. These mainly include goodwill from acquisition, software systems, customer-related assets, and operating license. At the beginning, intangible assets are measured at cost. If they are acquired from another company, they are measured at fair value at the acquisition date. After that, if the asset has a limited useful life, it will be amortized over time. For example, software is usually amortized over several years. However, goodwill is treated differently. Under ASB 136, goodwill is not amortized. Instead, the company must test it for an impairment every year. This means the company checks whether the value of goodwill is still reasonable based on expected future cash flows. When we compare 2023 and 2024, we can see that intangible assets increased in 2024. This is mainly because the company made several acquisitions, such as A2B Australia and Edison Lee. This acquisition created new goodwill and other identifiable intangible assets. This increase shows that the company is expanding overseas. In fact, overseas revenue also increased in 2024. However, higher goodwill also means higher risk. If the future performance of this acquired company is weaker than expected, the company may need to record an impairment loss. From a critical point of view, we should also note that internally, generate brand value is not recognized under ASB 138. ComfortDelGro has a strong brand and operates in many countries, but this brand value does not appear on the balance sheets, so the company's real economy value might be higher than what's reported. Overall, ComfortDelGro's accounting treatment of intangible assets follows ASB 138 and ASB 136. When the future, impairment testing will be very important, especially as the company continues to expand internationally. Next, let Zhou give a summary.
Today, I will provide an overview of how ComfortDelGro accounts for its lease agreements and explain the critical role leasing plays in our operations. First, let's look at our role as a lessee. We lease buses, land, buildings, and advertising space on buses. We recognize a right-of-use asset and a lease liability on our balance sheet. The lease liability is initially measured as the present value of future lease payments discounted using the rate implicit in the lease. The right-of-use asset is measured at cost. These assets are then depreciated over the shorter of the lease term or the useful life of the underlying assets. For short-term leases and leases of low-value assets, lease payments are recognized as an operating expense on a straight line based over the lease term. Now, turning to our role as the lessor, we also enter into lease agreements as a lessor for our proprietary and motor vehicles. These leases are classified as either finance leases or operating leases. It is classified as a finance lease. In the case, income is allocated to reflect a constant periodic rate of return. All other leases are classified as operating leases, where rental income is recognized on a straight line based over the lease term. Finally, the strategic importance of leasing to ComfortDelGro. Leasing is fundamentally important to our operations. Car rental and leasing are core revenue streams for the company and form the infrastructure foundation for our public transportation services. Thank you for your listening.